how does it all end? We have entered this sort of economic downturn, a virus crisis, a world crisis that has affected every person, every country, every industry, every business in some sort of way. And the question you might have is, how does it all end? And that is exactly what we're going to cover in today's episode. Hi, everybody. My name is Nev of One Deal Away, and I'm excited to share with you sort of my thoughts, my views of what's happening when it comes to economy, when it comes to financials, when it comes to the markets, and when it comes to your money and your wealth. I don't have anything to sell you, so I am asset agnostic. There are certain things that I like better than others, mostly because of what they can do for me and for you, and of course, our wealth. But I don't have a product to sell you, so you get sort of this very unmotivated opinion. Well, it's sort of motivated. I want you to understand. I want you to know. I want you to do well. And the reason I'm doing these things is because, years ago, I was in a bad place where I was putting money into markets without understanding what I was doing. 2008 came. It crashed. Alongside with it, my entire wealth, everything I have worked for up until that point had disappeared, had vanished, and the only thing I had left was basically bills. And, that has led me onto this trajectory to say, I got to learn what's happening, what's really out there, and I got to figure out, start thinking for myself. And so went out there, been doing a lot of research, a lot of studying, a lot of books, a lot of seminars, following a lot of people, unfollowing a lot of people, and really coming up with my own strategies and thinking of what I think kind of things have been happening. And I gotta tell you, not to toot my own horn, but I have done fairly well for myself, fairly well in predicting what the next thing is going to be. And for those communities that I'm serving very deeply, that are in my private sort of circles, family, friends, students, coworkers, clients that I have been advising, we have been, 80 some, 90 some percent accurate in the overall bigger picture prediction of what will be coming. And that doesn't mean that I don't make errors. I do. That doesn't mean that I sometimes think something will happen and that it doesn't. Typically it does. It just might take a little bit longer time. So I might not always understand a time period, which is why I don't always attach and say, tomorrow this will happen, or in a month this will happen, because I don't know. I have more of the broader sort of overview of kind of strategically thinking of how to protect my wealth. So the question that is likely on everybody's mind is, how does it all end? Like, how does it all look? And I have no clue. And I don't think anybody knows exactly how this is going to end. I don't think anybody knows exactly where the Dow price is going to be at the bottom, or what the gold price is going to be at bottom, or what the, or at the top, or what cryptocurrencies are going to do, or real estate, or anything. Nobody knows exactly how things are going to happen. We can all talk in sort of generalities of like, roughly this is what we're thinking, this is kind of what I'm expecting. But I wanted to spend time to share with you sort of what happened up until now, and kind of what happens in the future, right? Like, how do things like this typically happen? You might have heard other people talk about like everything bubble, or almost everything bubble, and kind of understanding that we have been sort of in the uprise. So let me do a little bit of a drawing to see if maybe I can help kind of explain this. So let's say that this is like, 1990s, right? So this would be 2000, okay? This would be 2010, and here we are in 2020, okay? And so in the 90s, we were sort of like humming along, and then everything was great. And then what happened is we had that dot-com crash, right? So kind of things went down. And then we were sort of like whatever up, and ended up happening that the market started going up, mostly because of what they were doing with the real estate stuff, lack of liquidity, and then boom, we crashed yet again. Okay. Since then we have recovered, and the market has done something like this. Okay, it has gone up without any sort of up and downs. There were some, but they were such a small, minuscule changes that we have been in this like very bull market. And whether you looked at the stocks, at the bonds, at like real estate, at like everything you can possibly follow, everything that can be traded, invested in, everything was going on an uptrend. Gold was sort of slow, but even gold performed really well. So literally everything you looked at was really going up, and that's why people kind of calling everything or almost everything bubble. But as we know, and as I have explained in previous videos, everything follows this sort of cycle components. Everything in the world, everything in the nature, from finance to health to seasons to like life events, everything kind of follows this very predictable up and down curve. And I say very predictable, it's sort of within reason. You can't say, okay, well, on this date this happens. Roughly speaking, right? Like we know that once we start hitting into March and April, typically on the northern hemisphere, we start getting into the spring and temperatures start warming up. And as we hit into the October, November, temperatures kind of start dipping in. And we also know that in the southern hemisphere, it is the exact opposite. So those are like things that we can predict, but nobody can say, even though we have like the official day of spring. The official day of spring could be colder than the official day of winter, right? Nobody can predict that. But, we kind of have rough estimates of what happens. And that's kind of what happens with the economy and the markets as well. So what ends up happening here is that when you start having everything kind of go up, at some point it has to go down. That is undisputable. Everybody will say that. The problem is that nobody knows what that some point is or what is going to trigger it at some point. In 2008, the trigger was that they were giving loans to people that couldn't afford it by mostly lying and cheating. I mean, I don't know how better to call it. That's really what has happened. In 2000 or late 1990s, right, like that 99, 2000 crash kind of thing, it was that people had a lack of understanding of internet and internet commerce that we understand much better today. But because anything with the quote-unquote .com component, people thought that it was amazing, so they were buying without understanding. We have had that happen with all kinds of different things in the history. Probably the most recent between this particular one and the 2008 was the Bitcoin in 2017, when people started buying, and anything that had like coin or blockchain or whatever, even if it wasn't, but if it had it in a name, all of a sudden the prices were going up because lack of understanding and lack of education leads us to sort of say like, well, if it looks like duck and it quacks like duck, it must be a duck, so I'm buying. We used to make fun of my dad, who is a very, very funny guy, and he one time he traveled to London, and this was his first time to ever go into London, and it was some sort of business trip, and the man has a lot of qualities. Fashion is not one of them. And so, but he was in London, and of course, when in London, he figured, well, I need to buy something for my family. So he decided to buy these sweaters. I mean, it was a very thoughtful gesture on his part, love you, Dad. But, they were not very fashionable. So I remember my mom was like, what were you thinking when you, like, purchased this stuff? Like, what was happening kind of upstairs? I was like, well, I didn't know what to do, so I just went with like the most expensive thing in the store. So sometimes, we equate the highest quality with the highest price. We equate the best product with something that everybody talks about, right? So it's like if the celebrity that I have heard or seen on TV is buying a particular product or a service, if it's if it's good for the goose, it's good for the gander kind of component. But that's not always the case, and so sometimes we blindly follow and go into things because we don't understand, and it's not really our fault that we don't understand. It's just that typically schools are not explaining a lot of these things, and they are also following what somebody else has written. So there goes that. It's sometimes blind leading to blind, which is why I am such a proponent of people going out there, getting their own education, reading a lot of stuff, watching opposing opinions and views and then formulating one of your own. So when you decide to do something, you understand why you are doing it, okay? So don't just go off of what I am saying or what somebody else is saying. Form your own opinion and kind of back it up as to why you think is the best, and saying, well, because Jimmy down the street did it or Susie on TV did it, it's good for me. It has to be a bit better reason than just that. Fair? All right. So now let's get back into this kind of, because that's what we want to uncover, is like, how does this all end? So typically what ends up happening is when, let me actually erase this. Hold on. All right, clean slate. So typically what ends up happening is that, let's say that something has a fair value, okay? So we're gonna put fair value right over here. I'm gonna say that that's roughly kind of the fair component. Now, what is fair? And I could probably do like a 3-day video explanation of that stuff, but let's just kind of go along with it. And then you have a particular asset. Let me change the market color so that maybe you can see a little bit better. And then you have a particular asset that, you know, might sort of go slightly up, okay? And then it will kind of go slightly down, and then we'll go back slightly up, and so that's kind of the direction that it goes in. Remember, we talked about the whole cyclical. Well, these are the points where it's going to be fair, and it's typically not just a line. Typically, it's like a band, so it's a little bit wider than this. But that's kind of where the fair is, right? In these sections here and here, or actually, sorry, my apologies. Okay, this section here and here is going to be overvalued. When things end up being overvalued, they have to go down, they have to hit the sort of fair valuation, then they have to be undervalued. Okay, maybe we'll do a circle with the V since I had left it over there. And then from the undervalued, they're going to go back up and become overvalued. And the reason that that ends up happening is because when something is overvalued, at some point people realize, wait a minute, I am paying, you know, $100 for a roll of toilet paper. Let's use that now, because that's a hot topic these days, right? But the roll of toilet paper should only cost $1. It's highly overvalued, right? So people stop buying. Eventually, there's demand, not supply, or there's supply, not demand. Price starts going down. As it starts going down, it kind of hits this sort of bottom, which is that below value. And now, because demand was super low, supply was super high, it hits this below value component that maybe that roll of toilet tissue is now selling for like, I don't know, 50 cents. Well, at 50 cents, you're like, hey, typically this puppy is $1. I'm going to buy extra rolls. Well, as more people kind of get onto that bandwagon, it starts going back up, and eventually it starts reaching a high point again. That is how that is actually played out, and that's sort of what ends up happening. And component to also remember is that the highest the overvaluation goes, the lower it actually has to go for the undervaluation, all right? So it's sort of, you know, the higher up it goes, the lower down it has to fall in order to kind of reach that equilibrium. When we talk about things like stocks, for example, right, everybody has been saying that they're overvalued. I'm saying that they are highly overvalued. Even with this drop that we have seen of like 30+% by this point, they're still overvalued, okay? You know, when you look at some of the balance sheets, the income statements, the earning reports, the price to earning ratios and that kind of stuff, like it's completely out of whack, right? And so you're paying for the dollar that the company is bringing in, like, you know, $100 or $500. Well, if I was to tell you, give me $500 and I'll give you $1 in exchange, you know, you'd probably say you're crazy. Like, I'll give you 500 Zimbabwe dollars, but I'm not giving you 500 US dollars, because that equation doesn't make sense. And it's exactly what's happening within asset prices right now, or, well, it's still kind of happening, but it was definitely happening up until the point of the crash. And that's why people are talking about that it's unsustainably high and it doesn't make sense. That's why we also heard that a lot of people were not necessarily buying certain stocks. They were actually exiting it because they have realized, wait a minute, this puppy is way up high. I'm going to exit right around here, right? So this is what I'm going to exit. This is what we call smart money. This is where they exited. And they're waiting for this component right here, right, the smart money, to be able to buy so that they can ride that puppy right back up. Everybody else, because when this thing hits a high, everybody starts talking about it. And as people start talking about it, more money starts pumping in, rendering this to go higher and higher. Eventually, some sort of event happens, whether that people realize it's a scam, whether the people don't see a value, or we have something like what is called the black swan, which is the coronavirus in this case scenario. It's sort of the unforeseen event that nobody could actually see coming that could tumble the whole thing down. Now, coronavirus, when it first came out in China, we didn't know kind of how big it's going to get. But at some point, when it started exponentially spreading throughout China, there have been folks who have been paying attention, who have been actually even talking about it. They were being made fun of, but they were talking about it on public channels, on the social, on like everywhere that they can get their words out and education out and warning out, but they were being ridiculed and made fun of publicly and definitely privately. There have also been smart money individuals that have said, wait a minute, this has a power to disrupt the economy. I'm going to start exiting. I was one of those people. There have been a lot of other people that have done it. Some we are learning today, some we're going to learn into the future. There are more and more articles showing up all over the place of senators and CEOs and leaders of the world and all these different people who like sold, dumped just about everything they held in the market right around here, and now they're out, they're sitting in cash, right? And they're waiting for this moment here so that they can enter, okay? That's the game. However, most of us haven't been taught the game because they don't teach it in school. I mean, for crying out loud, most of the teachers don't even know that stuff, okay? And it's not their fault. There are quite a few that actually do, but a lot of them don't. And even when your school, even your teacher, when you know some of these things, you are guided by the Department of Education. They give you sort of the book and say, this is what you teach. You can't really deviate from it if you want to hold on to your job. And so a lot of them are sort of constrained to teach what's in it, okay? That's why we're not getting that stuff in education, all right? So what's been happening? A black swan event happened, coronavirus in this case scenario. Things started to sort of go down, and they're not going down directly. They're kind of doing something like this. Okay? That's sort of what we've been seeing, right? And if you open any of the charts of any public traded company or watch any of the indexes or ETFs or whatever, you're going to see something very, very similar to this, especially if it's on the long end, or sort of as they call it, the bet on the upside. Okay? That's what you're going to see. That's that sort of going down component. Now, a lot of people are talking about it because of what's happening. I am talking about it because of what's happening, but it doesn't mean that the smart money is entering, okay? This is the part where smart money has already exited, and now people are sort of waiting, and you're going like, should I sell here? Well, I'm 10% down, I'm going to wait. Oh, it went up 5%. Cool, this puppy's coming back up. I'm not selling. Oh, no, it's down percent again. Oh, no, it's up 5%, right? And so we're playing this sort of emotional and financial roller coaster of saying, well, I'm not selling now because I'm down 10%, right? Then it goes up 5%. You're like, yes, it's turning around. I'm definitely not selling. I'm a genius. But then it drops and you're like, oh, crud, now I'm down 15%. Well, if I didn't sell at 10, I'm definitely not selling at 15. I mean, that's ridiculous. This is going to have to come up. So it goes up the next day or 2 days later, 3%, 5%, 7%. We even had 10% up days. Like, that's insane. These are some crazy numbers that I don't think were ever reported in the history. I mean, we've dropped like 30 some percent in 1 month, y'all. That's unheard of. Typically, when in these kinds of crashes, you drop, 30, 40% over the course of a few months. And we've done it, we're not at 40 quite yet, but we're definitely approaching it in like a month. That's definitely unheard of, and it's much faster. It's sort of compressed because of all of the liquidation, all of the ability for faster trading, all of the ability for entire world to kind of be connected and interconnected and participating in these things. And that's what we're seeing more and more and more of it. Okay. So now you're like down 15. It goes back up 7. You were like, all right, cool. I'm going to wait for a few more days to kind of go up, and maybe I'll sell, but we'll see. Maybe this is going to ride up. And then it drops down, 15%. You're like, oh, man, now I'm down like 20%. Okay. And we keep writing this thing down up until some point where it hits like, I don't know, 60% down, or like 80% down. Okay, and now you're finally like, I can't take this emotionally, I can't take this fiscally, right? Like, I am abandoning the whole thing, I'm selling out. You end up exiting, smart money starts entering, they ride the thing up, you get excited when they talk about it, you buy right back at the top, and you ride the train back down. That is what vast majority of people are doing. That is what I did in 2005. That's right. I got into the market in 2005, rode that puppy all the way down in 2008. And then I said, that's it. I got to learn how to do this, because this is not okay. I don't want to do this to myself. I don't want to do this to my family. I don't want to do this to my wealth, because I am working very hard for my money, and I want to find a way to preserve it. That's the reason why I'm doing these videos, to really kind of raise the awareness of saying, if you do get an up day, take it, right? You're gonna have to exit, or once we reach the 80%, you might as well just leave it, okay? Don't sell at that point and just wait for it. Now, the problem of riding the train all the way down to the bottom, and here's kind of what the problem is that, say I have a particular asset. I'm going to draw a house, even though we're not talking about real estate, but I like real estate, and houses are easy to sort of see and understand, right? If I bought something at X price, let's say $100, right? Okay? And now it drops 80%, okay? Negative 80%. That means that now I have this same thing, okay? The same little asset, but now it's valued $20. Okay, my apologies for a very ugly number 2. Okay, this is where my wealth is now. I've lost $80 in this process. In order for me to break even, this has to climb back up to 100. Okay, meaning it has to climb up $80. Right? Agree? 20 plus 80. Okay? But 80 is not 80% of 20, right? Like, it's not going to have to go up 80%. All right? It's going to have to go up 5, I almost ran out of fingers, 5 times, right? 5 times 20 is 100. Right? Okay? So 2, 4, 6, 8, 10, right? I'm just going to do that, and I'm doing that because I don't know if you know this, but my niece and nephew watch these videos as well. They're still kiddos, and so sometimes I'll do something like super simplified, because I want them to get it as well. Cool? All right, so thanks for playing along. So it has to go up $80, which means that it has to go up 5 times, or 500%. That is a huge increase. And while, yes, it will eventually get there, right? how quickly can something appreciate 5x if on average it goes up only 8% per year? Okay? How many years does it take? A lot. Okay? I can hear my nephew say, a lot. Okay? It does. It takes a lot of years to do that. That is, and I'm using average of 8% because that's what we've been told, that the market on average goes up 8%. Yeah, sometimes it does, but there are years where it goes up 0 or negative or 0.5% or whatnot, right? So even if you were to say every single year kind of goes up 8%, and it's sort of chugga 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 chugga, kind of like that choo-choo train of like, I think I can, I think I can, I think I can. It'll be a while before you get back up here, which is the reason why I'm saying that while yes, you can ride this all the way down and then wait for it to slowly over the years, sometimes even decades, goes back up. Exiting sooner is a much better choice. Now, I'm not telling you what to do. I am not a financial planner, a financial advisor, a legal advisor, an investment advisor, a broker. I'm none of those things. I'm using this more for educational components and sort of my way of thinking about markets, about money, and about what makes sense to do or not to do. Because if I drop, let's go back up to my little house component, right? If I drop with this, let me see if I can change colors, okay? If this same house drops, say, only 10%, okay, that means, right, that means that it will have, still $90 value, okay? So for me to go from 90 up to 100, okay, it needs to go up 10 bucks, okay? So that's going to be a bit over 10%. That's much easier to achieve than the 500%. It's going to be much quicker. It's going to be much simpler. It's not going to take some sort of economic or financial miracle for that to happen. It ends up going much faster, which is why smart money was exiting. And if they didn't exit right here, they definitely exited here or even here. Most of the folks are riding this puppy up saying, I have time. I have 20 years or 30 years. I'm not worried. I'm not worried either, but we don't know whether you'll be able to get back up 500% in 10 or 20 years. Nobody can guarantee that. Nobody can predict that. Yeah, it's possible. It's possible we go up, 5,000x. But nobody knows what that exactly is going to look like. So I think understanding of this whole overvalue, undervalue, kind of how the market works and how the game is played is something to sort of put in your strategy tool belt to understand when you're watching these things, to really get yourself in the state of mind where you're like, oh, I remember this, right? Like, this is kind of what's happening. This is what's going on, right? So that's sort of what the how the whole market works, and that's where you've likely have heard people talk about the whole component of like, when there's blood on the streets, that's when you buy, right? Sort of the fear and greed, right? You sell the greed, you buy the fear. I hope this is helpful to you. If you are enjoying some of these educational videos and sessions, please let me know. Hit me up. Do subscribe on the channel. I'm going to continue doing these things, trying to help you navigate through these very sometimes confusing and convoluted waters. If you're interested in free educational sessions, I am gifting some of my books for absolutely free. The links are actually right down below the video. So go ahead and grab the book, and it comes virus-free, meaning it comes to you digitally sent. It's an actually physical book, but I'm just sending it digitally. That way you don't have to worry about how do you like Lysol and spray and that kind of stuff with the book. Until next time, stay forever money blessed, and do remember, you are only one deal away.